Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about 3 SoFi Technologies SoFi stock articles. In the first article that we're going to be analyzing today, it's titled, SoFi Technologies Insiders Add $10.2 million worth of stock to their holdings, which is absolutely phenomenal news, especially since last week we heard of another insider selling this company, but clearly more insiders are buying this company than selling this company, which is good overall news for this stock and investors and shareholders within this company. So after we go over all of the buying and selling data among insiders, we are also going to analyze another article titled, Cathie Wood just bought this fintech after it smashed earnings. Should you? So Cathie Wood is the CEO of ARK Invest or ARK Investment Management, who is by my estimation a celebrity investor. Now clearly she is much more than that, but I don't agree with her investing style or choices, but overall it's good to see that she is purchasing SoFi Technologies specifically because that's a company that we like. So for more videos on SoFi Technologies, don't forget to go and annihilate that like button right now, subscribe if you are new, go ahead and become a member of this channel for as little as 99 cents per month because that's what keeps me here on YouTube, but if not, don't worry, by subscribing you're going to get this content for absolutely free. And with all of that being said, I say let's jump right into today's stories. SoFi Technologies SoFi stock currently trades at $7.30, while very bullish analysts believe this company could surge up to between $12 and $15 per share, which is going to be a hefty payday over the next 12 months for investors if these more bullish positive analysts are correct. Now, what people are worried about is that we've seen a lot of insiders selling SoFi stock lately, but now let's talk about the upside potential considering that SoFi insiders have purchased over the last year around $10 million. For instance, in the last 12 months, the biggest single purchase by an insider was their CEO and director named Anthony Noto, which is unsurprising, where he bought $5 million worth of SoFi stock in one sitting. And he made this massive purchase at almost the exact right time to where he purchased $5 million worth of shares when they were trading for just $4.58, which is when I was advocating to buy this company. Now, clearly, the share price has recently surged from $4.58 up to $7.30 as of right now, so clearly his position is up massively, yet he is still buying more alongside other insiders within the company, such as various executives and even upper management. In total, SoFi Technologies insiders have bought more than they have sold over the last 12 months, and if you want to see a visual of this, you can look on screen right now. Clearly, over the last 9 to 12 months, we have seen a substantial amount of buying in this overall company when the shares were cheap, but gradually, as shares got more expensive, we have seen less and less buying to where eventually insiders have sold more than they bought over the last 3 months. But when we take this into consideration, over the past 6, 9, and 12-month periods, insiders have purchased far more shares than they have sold. And if you want to see a more broken down version of this, you can see on screen here that insiders have recently bought. For instance, the CEO bought again on November 8th of 2023, and he bought approximately around almost $300,000, which equates to 44,000 shares at a stock price of $6.78. And we also saw another insider buying this company for around $100,000 when the share price was $6.69. However, when you see upper limits, we saw a lot of selling. For instance, at around the $9.29 range all the way to the $7.58 range, we saw insider selling. But as the share price was low, that's when insiders were buying shares of this company, and that's what I've advocated for investors to do. Buy this company on weakness between $4 to $6 was ideal. So if your average cost basis is $6 or below, then you are sitting on profits right now, which is phenomenal news because the long-term growth potential of this company's share price is absolutely amazing. And I think their stock price is going to surge even higher, especially once they become profitable during the quarter we are in right now. We also see investment celebrities like Cathie Wood and Jim Cramer both endorse buying SoFi Technologies. But although Cathie Wood and Jim Cramer are buying this company, does that mean you should? Well, not necessarily. necessarily. However, I personally am a big fan of this company. We all know that the fintech industry is a very crowded space, so we are trying to identify companies that have a long-term growth potential in this space, or even a related space. I'm talking about companies like Nubank, Mercado Libre, SoFi Technologies, and Ally Financial or Ally Bank. At the end, these types of banks will overcome, in my opinion, legacy banks, and thanks to the digital-first strategy and the pioneering in this space from companies like Ally Financial, also known as Ally Bank, as well as SoFi Technologies, we have seen a huge adoption towards this digital-first approach, especially in regards to young high earners. SoFi also released a very impressive earnings report during the third quarter that was so impressive that the founder of ARK Invest, named Cathie Wood, scooped up almost 500,000 SoFi shares at around $7. However, what does this mean for you as an investor? Is the stock good enough to buy right now if you plan to hold it for the long term? Because this could be a very lucrative opportunity. Well, as normal, I like to invest into companies on weakness and not while they are surging in their overall share price. I would rather just hold the company while it's surging, and I would even take some profits while it's surging and then use those same profits to reinvest back into the company once it inevitably pulls back. However, SoFi is a very interesting company because they are going towards a catalyst right now, which would be their quarter 4 financial results, which when released should indicate that they are now a profitable company, which could increase the share price even more. So it really depends on how you plan to invest into this company and how long you plan to hold. I personally like SoFi Technologies because I love their digital first approach, and I think despite the high interest rate environment and various banks and financial institutions collapsing due to the banking crisis we had, SoFi Technologies has performed phenomenally even during very volatile times. So just think about what this company could achieve while the general economy is doing well, and I think the economy is bouncing back right now, and I do not anticipate a large pullback in the general stock market like a lot of other people and investors are. I also want to quote directly from the article where they say, by looking at the bigger picture, investors should be able to see a general theme. SoFi has built a flywheel business model. This means that the company seeks to acquire users and then cross-sell a variety of different products and services. In theory, if user satisfaction remains high, people will stay on the app longer. This allows SoFi to allocate expenses toward other areas, as opposed to constant customer acquisition and retention. While this all sounds good, is it actually working? End quote. So essentially, what this financial reporter is conveying is that SoFi Technologies is very good at acquiring new customers and keeping their customers, because whatever the customer is looking for, clearly they have not found it in other institutions, and a lot of investors are looking for that digital first approach that SoFi Technologies can offer, because you can invest into stocks, cryptocurrencies, get a credit card, a debit card, open up a checking account, a savings account, get a mortgage or refinance your mortgage, refinance your student loan, get a car loan, and many other things that other institutions can't all do at the same time. And thanks to the recent earnings report, SoFi appears to be successfully monetizing their customer base while attracting new customers, considering that their overall user base for their platform is approximately 7 million customers, which represents a 47% year-over-year surge. Now, unsurprisingly, SoFi reported its 10th consecutive quarter of revenue increases, which is amazing. And with the September quarter coming in at $531 million, representing a 27% increase from the year prior, this is very good news because it indicates that this company is growing very fast. Now, the author does highlight something interesting that a lot of other financial reporters aren't capitalizing on right now, to where he personally finds the status update on Wyndham Capital to be very bullish and positive. If you're not familiar, SoFi Technologies has acquired 3 companies. They have acquired Wyndham Capital, Technisys, as well as Galileo, and their recent update on Wyndham was very positive, and Wyndham Capital was acquired in an effort to bolster their overall mortgage segment, which seems to be working very well despite a very high interest rate environment. A lot of people are not buying houses right now due to the interest rate being so high. So although this may seem like a terrible decision to buy Wyndham Capital and acquire them during a time of high interest rates, actually it's the best time, because as interest rates gradually teeter off and come down, new people people who are looking for housing or even people who are looking for a bargain right now will be able to use SoFi and Wyndham Capital to get very good and competitive rates. We also know that their student loan origination volume doubled since last year. So the company is not only growing their overall mortgages, but also their student loan refinancing volume is increasing, as well as their overall deposits and personal loan applications. So with such a prolific profile, a very active user base, and insiders buying this company, it's really hard to understand the bearish case for this company. Plus, we know that SoFi is a very diversified business with multiple revenue segments and streams, on top of the company becoming profitable during this very quarter. Therefore, SoFi Technologies has a lot of things going for it and not many things going against it. However, there is one problem with this company, and that would be that they are not profitable yet. In a previous video, we talked about how the company booked a non-reoccurring goodwill impairment charge, which amounted to $247 million. And this showed up as a huge net loss on their Q3 report, which scared multiple investors. However, if we took out this non-reoccurring goodwill impairment charge, which was just a one-time thing, their net loss would have only been around $20 million, which is a huge improvement from the original net loss, which came in on their report of $267 million. So really, 20 million was the true number, and that's why SoFi Technologies can literally become profitable during this quarter, because they can more than make up that $20 million loss. So evaluating this company can be tricky at times, but overall, this company is on a phenomenal growth trajectory. We can even compare SoFi Technologies to other comparable companies in a similar space, such as Upstart Holdings, PayPal, Wells Fargo, JP Morgan, Block, Bank of America, and many others. If we look at the chart on screen here, we are determining their valuation based upon the price to book ratio, and ideally we would want a low price to book ratio, to where Bank of America actually has the best price to book ratio on this chart. However, a close second would be Wells Fargo, and then, unsurprisingly, it would be followed by JP Morgan. And clearly, these are the much larger legacy banks, which have a lot of assets under their roof. Now, out of the newer companies, or the more fintech-related financial institutions, what comes up next is SoFi Technologies, to where they're just trading at 1.373. And remember, ideally, we would want this to be low, which is a very good improvement compared to other companies like Upstart, which has a 2.866, and PayPal, which has 3. Not to mention other companies that hover around a 9 price-to-book ratio. Therefore, when we filter out these legacy banks, such as Bank of America, Wells Fargo, and JP Morgan, SoFi Technologies shines as the #1 fintech company on this list according to their price-to-book ratio, which again should be very impressive, and this should communicate to investors that this is a very resilient and strong company. I also anticipate that their price to book ratio will continue to fall, which is good news, because remember, the lower the better. We also need to take into consideration that SoFi should not be technically valued as a financial or banking institution. They should be identified more as a technology company rather than a traditional bank. This is sort of similar how Tesla should actually be valued as a software business rather than just an automotive company. I think it would be unfair to only value Tesla according to their automotive segment, and it would be equally unfair to only value SoFi Technologies as a banking institution rather than their entire technology segment. Therefore, it seems that many investors misunderstand what this company truly offers them as a financial technology platform. The company's ability to reach lots of people around the world due to their all-inclusive app puts them leagues ahead of various legacy banks, especially as they continue to grow and grow. With SoFi stock down already 70% from their all-time highs, now could look like a phenomenal buying opportunity to dollar cost average into at these dirt cheap levels. But again, as of right now, you would want to obtain shares of this company between $4 to $6. But if you are a long-term investor, even buying now and holding for the next 5 to 10 years, the company should be worth substantially more in the future than it is currently. And that's why I hold SoFi Technologies in my portfolio. If you liked this very positive news update, don't forget to go and annihilate that like button right now. Subscribe if you are new. Don't forget to become a member of this channel to support me personally, because that's what keeps me here on YouTube. And with all of that being said, I wish you the best of luck, happy investing, and I will see you in the next YT video.